Hey guys, welcome to the podcast. My guest today is Steve St. Onge. He's Senior Director of Business Development and Corporate Communications at Paratek. And we talk about what to expect after your company has been acquired. So this is a very timely conversation. I learned a lot. I think you guys are going to love this. Don't forget to follow me on LinkedIn and look at the announcements because we do MSL Talk live once a month, which is on LinkedIn Live. And it's a panel discussion very similar to this platform, but check that out as well. And thank you guys for listening. Welcome to MSL Talk with Tom Caravela, a podcast specifically designed for MSLs and all things field medical. Hey, Steve, welcome back to the podcast, buddy. How you making out?
I'm doing well, Tom. Thanks for having me back. I wasn't sure I was going to be invited after a little performance last time around, but thank you.
Totally not true. Totally not true. First of all, you're always welcome back. And guys, you're in for a treat because Steve did an amazing job last time he was on this show, came back with this idea, which is incredibly timely. And what we're going to talk about is, there's it's an interesting time right now because there's a lot of layoffs. There's people that are getting downsized. There's a lot of acquisitions. And while we've talked about that recently on this podcast, we haven't really talked about it from the perspective of like the company perspective and why things happen, how they happen, and all of the things that surround this topic and what your expectations might be moving forward. So before we get into that, Steve, why don't you do a quick intro? Tell everybody who you are and where you're from and all that good stuff.
Yeah, so great to be back. Steve St. Onge. I head up corporate development and corporate communications at Paratek Pharmaceuticals. We actually recently were part of a transaction and a take private. So Paratek's no longer a publicly traded company, but I've been with the company since 2017. Actually joined in a medical affairs role and then over the course of time migrated into this corporate development role. So it's been a fun ride and career growth and kind of getting a little bit deeper dive into corporate life and not just field medical life.
Awesome. Well, I want to jump into that piece before we get into the actual topic. I want to jump into that piece and have everybody just explain. So you came from the medical affairs side, but then you wound up in corporate development. Can you just explain a little bit about what you do?
Yeah, so corporate development in small biotech and larger pharma is a little bit different, Tom, in just terms of roles and responsibilities. So I'm going to speak mostly from the small, mid-sized biotech perspective. So, my remit for the organization and, roles similar to mine in small to mid-sized companies really kind of fall into 3 or 4 buckets. One, how can you continue to grow the company portfolio? Now, whether that's finding commercial stage assets, development stage assets, whatever the strategic priority of the company is, going out and sourcing those, making cold calls, talking to a lot of investment bankers, understanding, what might be for sale or, what companies might be interested in divesting part of their portfolio. So that broadening the corporate portfolio and growing the company is one, major remit. Another, if depending on the stage of a product that you have, could be bringing the product outside the US. So looking for partners in other major markets. So whether that be Japan, Europe, Latin America, or otherwise. So out licensing that technology, recognizing the value, of it to the organization, bringing back in non-dilutive cash from those deals to the company, really important to a corporate P&L. So that's another role that you may play based on where you are in the life cycle of the product. And then, the third one is, and I found myself in this situation the last 2 years, someone shows interest in buying your company, in reacting to that in a reactive fashion, working with your financial advisors, your legal advisors, very closely with the management team and the board, to go through that exercise of hey, someone has come to the table and has expressed interest in taking over the company. What is the appropriate valuation for that deal? How can we, as a public company, maximize shareholder value? How are you going to negotiate the deal Are there other parties that you're going to reach out to once that inbound interest comes in to understand? It's kind of like, we call it doing a market check, right? It's like selling a house. If you have a single buyer, well, that's great, but do you really understand if that's the market and the most value that you're able to extract from the asset? So no different in the sale of a public company. So those are the three main buckets that somebody in a corporate development role, at a smaller company, a mid-sized company like Paratek would do on a day-to-day.
Awesome. Well, I'm glad you went through that exercise, because I want everybody to kind of know what perspective this is coming from as we get into this topic. And let's jump into it from the perspective of, let's just say you're going about your normal day job, everything's kind of normal, and then all of a sudden you find out that your company's being acquired. So now, what should you expect, and what should your thought process be at that point?
Yeah, if you're someone like me that's not an early riser, you should probably expect to wake up to a bunch of text messages, missed calls, emails. Historically, these announcements are put out in the early morning pre-market trading hours, especially if you're a public company. So there's going to be a lot of traffic, people wanting to know what's going on. You'll get emails from leadership, usually company-wide email from the CEO, and then there's going to be immediately following that announcement either a company-wide type town hall or maybe other smaller team meetings. I think when the announcement is initially made, there's not going to be a lot that leadership is going to be able to say other than really what's put out publicly in terms of, these are the terms of the deal. This is who's planning to acquire us. This is potentially when the transaction can close. A lot of the decisions about who's going to go forward in the company, what's the organizational structure going to look like, how does the acquirer plan to maybe prioritize the pipeline. Those decisions, a lot of times haven't been made when the transaction has been announced. Those decisions are going to be made over the next couple months. And even I think we'll talk about this coming up, post integration after the transaction closes, a lot of those decisions are made. So it's kind of an uneasy time, honestly, for the majority of employees, because there's a lot of questions that you want to ask and you want answers to. But the truth is, management, the board, the corporate development guy, we don't have those answers yet. Those are still decisions that are going to be made.
And I think a lot of people wonder about that. They're like, okay, how does this work? And maybe if you could walk us through what happens behind the scenes, as before the announcement, and then is it the type of thing where this is all being baked and then all of a sudden the announcement happens and it's like, okay, we're done, like the company sold and the new people took over and you just walked into a brand new company without any warning? Or is it more of a slow roll? Walk us through that.
Yeah, no, that's a really good question. So, before these announcements are made, it's typically months and months on end of, talking with potential acquirers, those potential acquirers doing their due diligence. So, depending on for your listeners, depending on the roles that you've had in your organizations in the past, you may have been part of these types of diligence activities, especially if your company has been on what we call the buy side and has been, proactively looking to target other companies for an acquisition. So there are, months of discussions between management, corporate development, from, one board member on one side to a board member on the other side, months of those negotiations and, deeper dives into really every aspect of the business. It's not just commercial. It's not just medical, manufacturing, IP, legal, you name it. There's, when somebody typically puts forward an offer to buy a public company, that comes a couple months before the diligence really, really ramps up. And then, there's negotiations on price and economics and all of those things. And then, that work ends with this announcement being made that, company A intends to acquire company B. They've entered into a definitive agreement to, for a transaction. But that's not where the work stops. So that's simply announcing the intentions to take on a transaction. From
Right.
that point, a million different things can happen, Tom. So depending on how the agreement is structured, there may be, once the deal becomes public, there may be other bidders that were involved in the process that could come in and say, all right, you got offered $10 a share, you've made the transaction public, now we'll come in and offer you 15 just because that's how much we love the product and we love the company. Now, there are, within the merger agreements, there are breakup fees. So if, a company like that is going to come in with a topping bid, we'll call it a topping bid, they're going to have to pay a breakup fee. It's usually a percentage of whatever the equity value of the company is. So if you're trading at $1 billion, it might be a $50 million breakup fee that the, topping bid company has to pay. I mean, that's one scenario. There's other things you're going to have to go out and get shareholder approval if you're a publicly traded company, right? We don't just, sign the paper, the ink is dry, and the transaction is done. So, shareholders have to approve that they feel that the transaction is in the best interest of themselves, but also, all other shareholders. There's antitrust that you have to go through. Many of you may have seen recently, there's, the FTC is really, really ramped up their perspective of what especially large mergers between big pharmas look like. And so there's an antitrust process that you have to go through. And then there's a ton of other work behind the scenes that has to happen between when that initial announcement is made and when the transaction actually closes. And that could be anywhere from 4 weeks to 4 months between that announcement and the actual transaction closing. And look, there's been a number of transactions that have been announced that haven't closed or have taken longer than 4 months to close.
Yeah.
So, just because that announcement has been made, you have to continue to operate, your normal day to day. You're going to continue to operate as independent companies until the transaction ultimately closes.
And that's the toughest part, I think, for a lot of people, because it's like, yeah, nothing to see here, business as usual. But it's, we already know the genie's out of the bottle. We already know you already made the announcement. So, and I know that it's that this is kind of these are loaded questions, because I know it's not a one size fits all, and there's all these different scenarios and there's all these different deals that can happen. But when a company is sold and after the announcement, like what's the normal course of events that happens next? And I know that there are people listening to this that's like, okay, well then what typically happens?
Yeah. So typically, after the announcement, but before the close of the transaction, there'll be a bunch of FAQ type documents that are issued by HR. But again, as I said previously, there's a lot of decisions that have really yet to be made in that period between announcement and closing. Leadership's going to have a lot of questions. I promise they're not trying to dodge you. It's just that they don't have the information yet to give you a fully flushed out and well-informed response. Now, once the transaction closes, you can expect to start to have some discussions around how are we going to integrate these two companies together? How is it going to impact various teams? Are there going to be upsizing of teams? Is there going to be downsizing? What types of synergies do we see? Are there going to be, incentives for retention? I've seen a lot of transactions where the acquiring company is deficient in a skill set. It could be field medical affairs. It could be market access. It could be something else, but they're really deficient in that skill set. And the reason that they've targeted your company for an acquisition is because they want that skill set and they want to be able to unlock the value that that individual or group of individuals could bring. So I've seen a lot of instances where people have been given huge incentive, bonuses to stick around for whether it be 6 months, 12 months, 2 years. So that's kind of what you can expect. A lot of the bigger, how does it affect me decisions don't come until after the transaction closes.
And that's, I think it's good to mention that piece, because if there is some type of retention bonus or incentives, that actually could work out in your favor, because that's not something you would normally get and normally be able that could be good money in your pocket. Yeah, maybe at some point there might be a separation at the end of it, but it may not all be bad news is what I'm saying. And I guess that's the next question is like, at this stage in the process, what can you tell people to help them as it relates to like their emotions and how they react to this sort of thing?
Yeah. So, I think the first thing is just take a deep breath, right? We say this in corporate development all the time. If you've seen 10,000 transactions or 10,000 deals, you've seen one, right? They're not all created equal. Like I said, just because a transaction has been announced doesn't mean it's going to close, doesn't mean it's going to close soon. Um, you know, and not every transaction means that everyone on your team or you are going to be out of a job immediately. And in fact, as I alluded to previous comments, it's actually kind of quite the opposite. I think from a personal and professional growth perspective, there's a lot of these transactions that offer that type of development. You may be going into a company that has, more resources to dedicate, has, additional pipelines or therapeutic areas that you might be interested in. So, or like I said, it's a scenario where the acquirer is new to the therapeutic area and they're really buying the company for their knowledge and expertise in that space. Their current teams maybe don't have the bandwidth to take on additional work or support additional programs or ongoing clinical studies. And they're really banking on the key talent that they saw during their assessment of the company to, come in-house, stick around and do a great job. And I think the other important thing to consider, Tom, especially in today's larger macro environment, is in a lot of instances, I won't say a lot, some instances, the acquisition is actually the best thing, not just for shareholders, but it's the best thing for employees too, right? We've seen a lot of large layoffs, reductions in force recently, and sometimes a transaction and a deal is a way for a company to get around having to do a large cost-cutting measure. So, I think the deal may very well, as a public company, we always think about shareholders, because, our board has fiduciary obligations. But a lot of times these transactions might be saving you from a larger, more detrimental event.
That's a really good point. And I think people don't always realize that. They always think the worst and expect the worst when actually it could be quite the opposite.
Yeah.
So with that, what advice, like what could you tell people as far as what do they do next? So you find out about this acquisition and you start hearing some things. What advice do you have? Like what should they be doing at that point?
I think a lot of it's mindset, Tom, actually. Prepare for the ambiguity, but accept the uncertainty. I think you just have to every day, again, it's business as usual until the transaction is closed. Ask the right questions, but understand that some of the answers are just not going to be readily available. And I think during this time, I always tell people focus on the variables that you can control. Like, what do you ultimately in your domain have control over, right? And that's continuing to knock it out of the park on your day to day. Take the time to learn more about the acquiring company. Use your network. It's typically frowned upon. I wouldn't suggest that you call up somebody who is in your role at the acquiring company. That's typically frowned upon. But use your network. Has somebody worked for this organization in the past? Do they have a lot of connections with individuals there? What does the leadership look like? What is the corporate strategy? What's the the culture, the overall company reputation? So do your homework and understand, hey, is this a company that, if given the opportunity, I would want to continue to be part of? And I think that goes into further, we always want to have an updated CV, right? I think talk about, don't go 5 years or 3 years just because you haven't changed roles without updating your CV. But get your CV ready. And it's not just going to be for the purposes of interviewing externally. You may be interviewing internally, right? To one, maybe keep your role, take on a more senior role, or take on a different role. So I think getting prepped, whether it's going to be, life with the go forward organization or life outside the organization is a really good step to take.
Well, we talk about that a lot. I know that I say that ad nauseum. That you really have to make sure you're updating your CV regularly, a couple times a year, because you just don't know. And the thing is, you're not going to remember or really be able to keep track of all of the projects, accomplishments, and achievements, and everything that you've been able to do to build up such great experience and put forth such a great body of work unless you capture it. So that's really good practical advice, especially in situations where there is volatility, because then you'll be prepared. But I like the fact that right so far, everything that we've talked about hasn't been this doom and gloom story. Like, oh, you know what? Batten down the hatches, man. Acquisition time, announcement happens, and it's a death sentence. I appreciate that there's a lot of positivity that we're discussing. There's a lot of strategy that we're discussing. But the other thing that I want to mention, and I think we need to talk about, is what warning signs should people look for to prevent them from being caught off guard if it is going to be bad news?
Yeah, so I think it's critical, and whether some people innately have this knowledge and others don't, but have an understanding of your company's financial position. Both near term, intermediate term, and longer term. What does the cash runway look like? Does the company have cash for 6 months? Do they have cash for 4 years? Those are much different scenarios. When do you think the company is going to turn profitable? And if they're not profitable, in today's market environment, do you think, or do the experts think, that going out and being able to raise this money is, to continue to fund operations, is going to be reasonable? I'll tell you, that in today's market and macro environment, that's difficult to do for early stage companies that are years away from generating either revenue via commercialization or becoming profitable. It's not to say that it's impossible, but right now the markets are favoring companies that have either commercial stage or near commercial stage technology being able to effectively raise that money to continue to fund operations. And again, I realize not everybody listening is a numbers person and wants to get into the nitty gritty of what's said in an earnings call and what's filed in public disclosures. But find someone on your team that is a little more savvy, or find someone internally that you're close with that knows how to navigate these situations. Usually somebody that you work with has a fundamental understanding of this. Some acquisitions come as a total surprise. I think a lot of the listeners have maybe been in those shoes before. Companies humming along, doing great, has multiple products that are generating a ton of revenue and profitable, and hey, somebody else comes up and and gobbles you up. But other acquisitions should be much more expected, and especially for those in today's environment where, one, if you want to go to the capital markets and raise money, it's very challenging, and two, the capital markets aren't really open to you going and taking on straight term debt. It's the same story for biotech, right? As we're seeing in the home buying experience for homeowners right now. 7 to 8% interest rates in the mortgage field, that translates to 13 to 14% interest to most biotech companies in straight debt. And when you start talking those numbers, it's very difficult to make a sound business case for, hey, I need $500 million. Let me go raise it at 14% interest. And then I think just remember, this is part of working in this sector. There's going to be ambiguity. There's going to be peaks and valleys. It's not 2021 anymore. We're not riding high with these crazy valuations that we were 2.5 years ago, and an interest, basically a free interest environment. Anyone could go out and raise money, regardless of whether the technology was good or not. And we're in a state right now, and I think we will be for the next 12 to 18 months, where public company boards are thinking long and hard about strategic alternatives for companies. And boards, that's their job at the end of the day, is to do, what's best for shareholders and be able to maximize and extract that value. And, that may mean selling a company or a product before it reaches its peak potential. And we've seen a lot of cases of that over the last couple of years.
Well, and let's get to that. I want to talk about, you mentioned the word macro, and I do want to talk about the big picture. Like why is there so much? There's always volatility to the pharmaceutical industry. I've been in the industry for 30 years and it's a roller coaster. But why is it so crazy right now? And what could you tell people some of the factors that you're seeing as reasons for this crazy market?
Yeah, so it really, directly, biotech always, correlates well with the broader macro and interest rate environment. And, I think what we're seeing right now in terms of company evaluations suffering, the inability to raise the necessary funds to continue operations is a direct result of that. And, people might wonder, well, geez, if that's the case and company evaluations are down, why haven't we seen more mergers and acquisitions in the last 12 to 18 months? There's really a number of reasons for that. As I mentioned earlier, there's increased scrutiny from the FTC with regard to antitrust. Inflation Reduction Act has had a big impact on how pharma has viewed M&A as well. We know that there's going to be big time government pricing pressures for the top 50 or 100 drugs. So, the larger pharmas that are out there looking for multi-$100 million products or billion-dollar products are thinking longer and harder about, geez, how is the Inflation Reduction Act going to impact the price potential as well as, future commercial and revenue potential of products that we're looking at. So I think that's the big drivers right now. And look, it's forcing companies to make really tough decisions about how are they going to prioritize their pipelines, how are they going to prioritize their commercial products. And I think, in field medical, right, we're a very critical cog to the commercial story of commercial stage companies. But at the end of the day, the view from boards and finance gurus is med affairs, those are not revenue generating positions. And right now there's a focus on, is the spend critical? Does the spend directly correlate to revenue generation? And sometimes the answer in med affairs is very clear, yes. But other times it's not, it's not quite as black and white, and it's a little bit gray. So there's, you know it much better than I do, the recent trends that we're seeing. But I think we're going to be kind of stuck in this. I don't want to call it a rut, but there's peaks and valleys, highs and lows to this business. I think we'll be stuck here for a little bit, maybe 12 to 18 months until the interest rate environment changes, until it's easier for companies to go out and secure debt or, other types of financing. Yeah,
but it's like anything else. First of all, I just to unpack everything that you were saying, I think that everything that you just put forth is, from what I could tell, really accurate. Inflation Reduction Act, just the broader interest rates. There's just these reasons are so apparent, and so it's not. There's very specific things that we could point to, but because things are always in flux, there's resiliency that always comes through. And I say that because, if you experienced, for example, 2008, the world literally was coming to an end. That was the big collapse and the financial crisis. And anybody that was around at that point in time, it was literally, even 9/11, going back to 9/11 in 2001, right after that, it was the end of the world. So like 9/11 in 2001, 2008. And oh, by the way, COVID happened and it was like, oh my God, We're never going to be the same. We'll never transact business the same. This is the worst thing that could possibly happen. And I'm saying all this because right now 2023 is in this really weird down market. And a lot of people aren't familiar with being involved in a down market, but we're going to pull out of it. It's going to get better. It's not going to stay the way it is. People that are unemployed right now, you're not going to be unemployed forever. If you're involved in an acquisition, it's not the end of the world. Things are going to turn around. Pain is temporary. You guys have heard me talk about that. I think what Steve said earlier, I think it's really important to just do a really good job every day. There's no substitute for excellence. It's not a time to settle for mediocrity. It's not a time to complain and to air your grievances and to spend a whole lot of time talking to friends and colleagues and peers about how bad everything is. Nothing good comes from that. So I just want to go on the record to state that even though there's been a lot of uncertainty, there's been a lot of downsizings and layoffs, it's affected all of us. It breaks my heart. I try to help people every day. And with all this acquisition stuff, but it's going to get better. It's going to turn around. So Steve, last minute advice for people. You were great, by the way. This is really awesome information. I learned a lot. But what like final advice do you have for people that either are going through an acquisition now, think they may go through an acquisition, or have recently gone through one?
I think you kind of mentioned it, Tom. There's a couple things. Really talented people, and that's 99% of people I know in industry. So, I thought I worked with a lot of smart people in clinical practice. I work with so many more smart people in industry. Those really talented people, they're not going to be free agents for long. So sometimes a break is honestly refreshing. You don't realize it until you've been there and you've had a little bit of downtime. It allows you to kind of have a blank slate. And, for me personally, if my transaction had gone in a different direction where, the go forward organization said, "Hey, Steve, we don't need you anymore." I talked to you about this before, Tom. I mean, I told my wife, like, I'd want to spend 9 or 12 months at home with our kids. And, I think that would have been awesome for our family. I had, a lot of busy days, during the birth of our 2 kids and, time that I'm not going to get back. And so I think sometimes just taking a deep breath and saying, "Hey, is this the best thing for us personally as a family?" I've known people that have gone through, acquisitions or layoffs, and they've taken their severance and they've gone on to start really successful businesses, kind of take on an entrepreneurial mindset. And, they look back and they're like, "Man, what an opportunity." Like, I didn't see it as an opportunity at the time, but it was. And I think, for every door in life and business that shuts, another 5 are going to open for really talented and successful people. And, somebody once told me, I think it rings really true, like, opportunities are like buses. There's always going to be another one coming. And, but remember that success is not owned, it's rented, right? And the rent is due every day. And to your point about even in these times of uncertainty, like, let's put our head down, continue to rock our day job. And, if you're really talented, you're going to find a role. It's not going to be long. So look, the need for innovation in this space is not going away anytime soon. I just read an article the other day that, in the next, I think, 5 years, big pharma is facing $100 billion loss in terms of revenue from products that are coming off exclusivity. So, these companies are going to continue to be looking for really solid innovation, and that's going to be what continues to drive small biotech. We just have to ride this storm out here, because rare disease, hemo, immunology, those are spaces that, like I said, the innovation and need for it is not going to dry up anytime soon. So there's lots of money sitting on the sidelines from an M&A perspective, from an investment perspective as well. During this larger macro environment. Once that starts to ease, we're going to see a lot of that money start to come off the sidelines.
No doubt. You know why? Because history repeats itself, and that's always the case. So let's leave it at that. Steve, you're awesome. I appreciate you coming on again and sharing your wisdom. That went really fast, and I hope it gave a lot of hope to people. I know that we talked about a lot of things, some good stuff and some other stuff, but I just think at the end of the day, there's so much to look forward to, and like you said, there's always opportunities. So seek out those opportunities, and thank you guys for listening to this show, for supporting this show, and for sharing this show. So we'll see you next time. Steve, thanks again, buddy.
Thank you. Hopefully we can do it again soon. Take care.
Thank you so much for listening to the show. And if you enjoyed it, please subscribe so that you don't miss an episode in the future. And feel free to leave a rating or a review or a comment. Thanks again, and we look forward to seeing you soon.